So you just started day trading and you have a small amount of money and you want to grow it into $10,000 or even $100,000. In this video, I'm going to teach you how you can grow your small forex account fast without increasing your risk. So the whole concept of asymmetrical compounding is that you are taking your profits and you are reinvesting it. So here's an example. Let's say your minimum risk to reward ratio is 1:2. So your first winning trade, you risk $10 per trade, okay? $10 per trade. And then your risk to reward ratio is 1:2. So you make $20 in profit and now you have a total of $30. Then the next trade, you can risk your $30, whatever that you have made in the first trade, and then you win that second trade, you make $60 in profit and you have a total of $90 now. Now, the same thing goes for your third and fourth winning trade. And then at the end of the fourth winning trade, we will have $810 in total, which is a whooping 8,100% return. So you can see how based on this entire concept, right, you are just risking the money that you make, right? You are just risking your winnings. That's why there is not much risk involved, because if you win the first trade and then you are just risking your winnings plus another 1% on the next trade and then the next trade, so on and so forth, you are basically just risking the amount of money that you have won, right? That is why this is one method that you can use to grow your small account fast without increasing your risk. As you can see over here, the higher the risk to reward ratio, 1:3, the higher the amount of profits you're gonna get. So you can see over here, that's another example where instead of $10, you risk $50 on each trade. And you can see how with a mere risk to reward ratio of 1:3, the account eventually compounds to over $12,000 just by reinvesting your previous profits into your next trade. And this just exponentially increase your profits for the next trade when you're on your winning streak. So this entire compounding strategy is good for strategies that have a risk to reward ratio that is higher than 1:1. And then the strategy that you have also must have a frequency of having winning streak of 2 and above. That means your strategy must work at least 2 times in a row. You must have at least 2 wins in a row. And you can see how over here, here's an example, your starting trading capital is $1,000. And then you can see how at the end of the day, with a risk to reward ratio of 1:4 and a win rate of 35%, you can see how the profits is $4,000. This is why it is so important to have a high risk to reward ratio, right? The higher your risk to reward ratio per trade, the lower your win rate need to be to become profitable. So never ever take trades that have a 1:1 risk to reward ratio. Try to aim for 1:2 or 1:3 or even 1:5, right? The higher, the better. My second tip for you guys is to have the mindset of growing your account rather than trying to flip it. If you try to flip it, you will lose, guys. Like, I'm just saying this from experience. Whenever I have the mindset of like trying to flip accounts, I just end up blowing their accounts. You should really be focusing on growing your small account slowly, right? Doesn't matter if it takes 1 month, doesn't matter if it takes 1 year, right? Just focus on growing your small account slowly. In this way, it will really reduce your chances of blowing your account. And please don't think that you're gonna be rich in 6 months, alright? That is just unrealistic. If you're just starting out and you think that you can become a millionaire in 6 months, that's just not the truth, guys. I hate to break it to you, but it's not the truth. It takes time, right? Trust the process. Trust the process and make sure that your strategy is solid before you even really think about going at it. My third tip for you guys would be to only take sure win trades. Chances are, if you have been trading for a while, you will know that there is high probability trades and there is also your low probability trades, right? There are those trades that you know like 90% in your gut that is going to go in that way. And then there are those trades that is like, man, you're not very confident and like it's like price is in the middle of nowhere making small candlesticks, but you're forcing trades. Those are the low probability trades that you want to stay away from those low probability trades. So you should only be taking your high probability trades. Things like you're buying at your super strong support level. If there's this key level that is like have price have not been breaking past since forever, like it's just not breaking past it, then you should be looking to buy it back up. Or another example could be trading with the trend rather than against the trend, right? You are able to capture much more pips. With that said, I want you guys to remember that nothing is ever guaranteed in this market, alright? There will never ever be like a trade that is 100% going to win. So make sure you always use a stop loss and really try to minimize your risk as much as possible. My final tip for you guys would be to look at how much your account grows in terms of percentages, not by the amount of money. So what this means is that, let's say you have a $100 account, right? And then you have made $50 in one day. That is impressive growth. Even though that's only $50, but think about it in terms of percentages. That is literally 50% of your account in one day, right? And this helps you to stay grounded and not be greedy and trying to aim for ridiculous gains like $100 to $1,000 in one day. And based on this, you are really able to preserve your capital and grow your small account slowly without blowing it. Because if you think in terms of the amount of money, right, you'll be using super high lot sizes like maybe a one lot, and that will be causing you to over leverage and then end up getting margin caught and you end up blowing accounts after accounts. That's why you need to look in terms of percentages, really help you to stay grounded and stay alive in the game for the long term, guys. Remember, it's all good for the long run. And guys, remember that if you have a small account, you need to really focus on preserving that capital, right? Focus on not losing any money and then think about winning money. That's why it's so important to think in terms of percentages, which really help to stay grounded. Guys, if you're interested to learn from me personally, learn day trading from me personally and get coached by me, feel free to message me on Instagram at @TheTradingGeek and like this video if this video has helped you guys out, and hit that subscribe button because you're posting awesome trading content just like this every single week. And I'll see you guys in the next video.